What's up, traders? There's not a lot of assets making new all-time highs, so anything that is, I think it's worth taking a look. Over the last couple of years, people have complained that this shiny yellow metal may have lost its luster. And whether you look at it as a speculation, an investment, an inflation hedge, a store of value, oftentimes in the past, when we've seen big breakouts from key levels, it was because there was something cooking behind the surface, and gold was able to sniff it out when other people didn't. So before we jump into some long-term technical analysis with trade targets, I just want to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so here we have the gold chart, and we're basically looking at these three peaks right here. We put in the initial peak after the long run in August of 2020. We peaked out once again in March of 2022. And now here we are once again in May of 2023, testing that same level once again. If we just switch back over to the candles here for a minute and zoom on in, we can see that on the daily time frames, we had our highest close ever on gold to US dollars at $2,067. And then here, if we zoom in one more time, we saw another close right around $2,050. And now here we have closed today right around that $2,050 once again. So on the daily time frame, we're above the 200 exponential and simple moving averages. They're both sloped to the upside, and we're getting ready for a blue sky breakout, but haven't quite secured it yet on the daily, that is. So if we switch over now to the weekly and just take another look at it, we can see we're in a very strong bull trend. That bull trend peaked out back in 2011. We then went into a bear trend, consolidated to the downside, and just traded around in this range until we finally broke out in June of 2019 and then went on this parabolic run. Again, we topped out, put in a low, topped out once again and put in a lower low, back tested the 200 exponential and simple. And while we see that we're losing momentum on the trend because the 200 simple is on top, both of them are still accelerating to the upside. And again, we're getting ready for that blue sky breakout. And if we zoom all the way in here once again and we look at this weekly chart, we'll see the weekly peak in 2020 was at 2034. The recent peak here in March of 2022 was under $2,000. And then now here we are getting ready to potentially close a weekly candle in one more day from now at a new all-time high. So one day from now, we'll know if gold is putting in a new weekly all-time high based on candle closes, which obviously is a blue sky breakout and very bullish if it does. And then finally, if we go to our monthly time frame here, we'll see that that same level on the monthly in August was at 1977, and then in March of 2022 it was at 1935. And we'll see that our most recent candle close here, the one that already closed on the monthly at 1993. So a new all-time high on a monthly candle close. So now we have closed a new monthly high, we have opened a new monthly high, and it looks like gold is attempting to run. And you guys know how I feel about anything in a blue sky breakout. Once something is at new all-time highs, there's no reason for anyone to sell it unless they're just deciding to randomly take profits. Because there's no resistance, there's no selling pressure, there's no one that's underwater just trying to get out even. You don't have any of that normal selling pressure that you would have on something attempting to make new all-time highs. So for me, a blue sky breakout is literally the most bullish thing that can happen in the markets. Not to mention, right now, there's a lot of economic uncertainty, which you could argue is a lot of the reason why gold is breaking out to new all-time highs. And actually, if you look at gold compared to most currencies, it's been going to new all-time highs over the last couple of years. Now, before we get too bullish on this, I do just want to mention that the DXY has been getting beat down now for months on end and does look like it's poising up for some kind of a reflex rally. And gold and DXY typically trade inverse of each other. So if this is in fact the case, it's not crazy to think that gold is actually setting up for a pullback, but eventually that doesn't change the long-term technical analysis telling us that we're more likely than not going to continue to the upside. All right, so here we are back on the weekly, and what I want to do is go ahead and pay attention to where our future targets could be. So if we just take our Fibonacci tool and we draw from the peak in 2011 down to our trough down here in 2015, that's going to give us basically our Fibonacci extension targets to the upside for new all-time highs, which we'll take a look at shortly. Obviously, that was coming from 2011 peak of 1924, so we already broke above that to new all-time highs with that 2020 run up. But since then, we've been banging our head on this resistance 3 times in a row now. And this is very important because We've done this before in gold's past, not that long ago, and it actually led to a massive run-up right afterwards. And that was actually the run-up of 2019. So we're going to zoom in here and just pay attention to this little area right here. Gold had been consolidating for years inside of a bear market and finally attempted to break out. And when it did, it topped out right around that 1371 mark. We then put in a higher low, which is bullish and the first sign of a potential reversal in the trend. And then we shot up here again and topped out slightly lower, but around that same area once again. We came down again consistently, putting in higher lows. So we have our initial lowest low here, then we have one higher low, then inside of the macro, we have a series of other higher lows. So we have the initial first bullish higher low, and then we have just higher low upon higher low, showing us that buyers continue to step in at a higher price every time. So we get less and less of a pullback, which means that buying momentum is picking up. Buying interest is coming in at higher levels each time. And then again, we top out here once again for the third time at that same level. And then we sell off once again and we put in another macro higher low. So we have our initial lowest low, then we have a higher low, then we have a third higher low, and then we come up here, start to top out around this area, reload, we flip the 200 exponential and simple blue one more time, and this time we break right through that level. And right about this time is when I got extremely bullish on gold publicly. And that being said, it led to the massive run up that came shortly afterwards. And now we've been in a consolidation period ever since. So that triple top had essentially marked a breakout to the upside. Once we broke through those levels, even though it wasn't yet a blue sky breakout, we were extremely bullish after that. So here we are setting up in essentially the same situation with even one more macro bullish factor, which is the fact that we're basically at all-time highs. So a blue sky breakout through our triple top. If we turn off the auto tool and we just zoom up here, we can see that this has projected out our Fibonacci extension targets to the upside. So we see our initial target, the 1.236 at 2,217. And then we see our 1.5 to 1.618 target, which is where I typically like to target. Obviously, an initial push up to the 1.236 is great, but realistically, our actual targets are the 1.5 to 1.618, which is going to give us targets up here at like 2,600 to 2,800. So if we look at that in a percentage move, we're talking about roughly 8% move up to the 1.236. We're talking about 27% move up to the 1.5. And then, of course, 36% move up to the 1.618. And if you're like me and you think about gold more as preservation of wealth rather than a speculative asset, what is that likely going to correspond with? Well, possibly increase of the currency supply, bailouts, some kind of shift or pivot from the Fed or other central banks. There's lots of fundamental situations that could happen. Continued inflation, but the Fed is forced to pivot and they have to start printing money again, or quantitative easing again. And again, expansion of the money supply is typically reflected in the gold price based on that currency relative. So is it possible we're going to put in another 36% increase in the money supply? Doesn't necessarily have to happen like that. If we look at essentially the situation from here, and a lot of people talk about how there was a 40% increase in the money supply, we'll see that the initial push up was about 50%, which is obviously slightly more. And then we'll see that where we bottomed after that move was about 20%. But if you look at the basically like center or like middle chunk of this, it's somewhere around like that 30 to 40%. So realistically, what did we actually do? Well, we printed 40% more currency, and when we did, gold went up by roughly 40%. So it preserved your buying power. You're not going to get rich off it. Maybe if you sold at the absolute peak and rebought at the bottom, you can scalp the trades a little bit. But the truth is, this is much more in place as a hedge against monetary devaluation of the currency, aka money printing. So what are the macro implications of this? If gold is saying that it's getting ready to break out and go to the upside, well, probably it's sniffing out that there's a pivot, or there's going to go back into quantitative easing or dropping of rates, or, you know, whatever macro event you want to argue. And maybe this is what's going to lead to a massive amount of sustained inflation over the next decade or so, with areas where we come down closer to like 2 and 3%, and other times when we spike up to 5 or 10%, like we saw in the last year or so. So the truth is, right now, gold is looking better than it's looked in a long, long time. And if we want to quantify that, we can say that gold is looking better than it's looked since 2011. With the exception of this initial breakout right here, we haven't been able to get above those levels. And now here we are with a wick on the daily to a new high. So let's talk about the bear situation that could happen. We could come up in here, basically cause a short squeeze, get a little push to the upside, and then the selling pressure comes in, the central banks take back over, or governments that are manipulating it, or so people have claimed for decades. I'm not going to speculate one way or the other. We know that there has been some manipulation because people have been convicted of crimes. So what is causing central banks to suddenly not be able to manipulate the gold price anymore? I mean, your guess is as good as mine. But that's what you have to believe. If they've been stopping it from breaking out to new all-time highs for years or decades, and now suddenly they can't stop it, you're basically saying that the central banks have lost control, or possibly that their agenda has shifted. So the bear case, in my opinion, would be that we basically just triple top right here, sell back off, and then we'll see about testing these lows again. And then the bull case is obviously the 1.236, 1.5, or 1.618. There is also one other situation that we haven't talked about yet. You may have noticed the measure move arrow that was already on the chart, but all that was is just taking the bottom of this pattern right here. And I'm sure you've heard me or someone else talk about this pattern many a times over the years, as this is essentially a giant cup and handle pattern. And when you do breakout of a cup and handle pattern, you measure the bottom of the cup up to the rim, and then that gives you your measure move, which we can see would take us up even higher to roughly like $3,800 gold target. Now, measure moves aren't necessarily precise, and obviously we'll have cleared through the other three targets before we ever get to that one. But we have 4 clear areas that we could pay attention to if we do get the blue sky breakout. And those are going to be the types of areas that other people would be paying attention to as well. Bots, algorithms, market makers, as areas to take profit after substantial gains. Doesn't mean that you just want to sell at the 1.236 or 1.5 and get out. But oftentimes you'll see people hedging their actual positions with paper contracts or something like that. So yeah, we've been talking about gold and how this bullish consolidation has been looking, the bounce off of the 200s, and now here the test of the highs again. And now we have closed out some of our longer time frames at a new all-time high compared to the US dollar. And we're very close to closing out some other long-term time frames as well. And now here we are at the daily, knocking on the door for the blue sky breakout. So yeah, gold's looking pretty good. We've got some clear targets to the upside. If we do see some resistance right here, we likely consolidate and continue on up. So obviously I'm not going to give you guys financial advice and tell you to go out and invest in gold or speculate. But I think it's pretty clear that gold is telling us something's going on here behind the scenes, and it's not going to be too long before the money printers turn back on. And if you want something to protect your wealth or preserve your buying power, maybe that shiny yellow metal is the one for you. So yeah, just want to take a look at gold. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So pretty cool for all the silver and gold stackers out there, or any of the other precious metals. Because if gold does break out to a new all-time high, it's likely to drag along all of its precious buddies as well. So yeah, that was fun. Just want to take a look at gold real quick. All right, I'll catch you on the flip side.